Hi, everyone. My name is Srinivas. I'm on the investment team here at Draper Associates. We're an early stage investment firm based in the Bay Area. We invest around the world in early stage companies with three major themes: automation, decentralization, and friction reduction. Super happy to be your moderator today on this panel about investor value add. I'd love to introduce our panelists. I want to remark that this almost never happens in technology and VC meetings where I'm in a meeting with just women, but I'm so happy to see that this is finally happening. We have with us Joanna, Rees, and Wendy, Xiao, Schadeck. Joanna is the managing partner of West, a venture studio that specializes in designing, building, and launching brands, including Twitter, Square, Impossible Foods, GoFundMe, and many others. She served on the board of 30 plus VC-backed companies and 3 public tech companies. She was a senior advisor of the B team and led the formation and capital raise for Endeavor Catalyst, Endeavor Global's impact investment fund. Joanna also founded BSP Capital, a VC firm focused on early stage companies, combining tech innovation and market development. Besides this, she has expansive experience in politics and a bunch of other areas, which we were talking about in the green room. So excited to have you here, Joanna.
Thanks so much.
We also have with us Wendy, Xiao, Schadeck. Wendy is a partner at Northzone, based in New York, and focuses mainly on companies in the consumer, health, fintech, developer, and Web3 infrastructure spaces. Her portfolio includes Spring Health, LifePeer, 3Box, Open Zeppelin, amongst others. She previously worked in management consulting and very interestingly started a company in the childcare space before this as well, which I have so many questions about. Hi, Wendy.
Hey, thanks for having me.
So great to have both of you here. And we're talking today about something that I'm sure all of us spend a lot of time thinking through as investors. Value add, I feel like, is such a loaded term. So I would love to set the stage with just sort of like defining what value add has meant over the years. Joanna, let's start with you. You've been investing for really long. You've been so close to technology companies. When did this idea of value add from investors become a thing? Because a different generation might even say that the capital is the value add. What more value do you want from me?
Yeah, I think if you go back to the beginning of venture capital, it was really about providing expertise. And then they also provided funding. And when venture capital became much more of a defined asset class, like when Dick Kramlich and Bill Draper, your Draper Associates, first got pension funds to be able to invest in venture, it became much more, it's transformed into much more of a financial, it's providing financial capital. And yes, there's expertise, but it was really now it kind of moved into just a much more defined asset class. And I think we've seen a move of new firms emerging, trying to almost get back to some of what it was at the beginning, but under different models. Like we're a venture studio, so we're brand and marketing experts who also invest. Atomic.vc is another venture studio that founds companies themselves and then helps provide additional capital and grow them. And Andreessen Horowitz set up a massive operating, expertise and operating entity with hundreds of professionals to provide additional value. And even firms like Foundry Capital, which were just as a fund in itself, has now relaunched as Foundry Network. And they're both a venture capital fund and a fund-to-fund, really trying to create their own ecosystem.
I love that. And Wendy, you are, amongst the youngest women partners in venture capital today. You're a rising star. You've also been a founder. So how do you think about this? Having been a founder, honestly, can investors really add value, or is that just lip service?
Yeah, absolutely. I think there's really 2 dimensions to it, right? There's kind of the institutional value add of having a franchise, perhaps with a stellar brand and a community of companies, portfolio founders that have gone through similar trajectories as you. And then there's kind of portfolio support, having talent teams and marketing teams that can kind of help you get started in those kind of early days, and then play more of a connective sort of tissue role as the company expands and, helps you kind of recruit the person that recruits rather than helps you recruit the person that does the marketing rather than doing the function themselves. That's like one really important aspect, I think, of the institutionalized value add. And I think most firms at this point have learned that this is a checkbox that needs to be checked, and the kind of level of support has a bit to do with the ability of that institution to attract capital and the systems for kind of attract talent on these platform roles, but also the systems for organizing these people around their companies. And sometimes that has actually more to do with the partner engagement and the partner's kind of internal championship of the portfolio company. And then I think the other more interesting dimension that perhaps is easier to differentiate on, or actually perhaps harder to actually differentiate on from kind of the outside in, but more important, I think, is the personal value add of the investor that's going to be on your board, or as an advisor, or as a board observer, helping you think through kind of the trajectory of your company. And this is, as I was going kind of through my journey in venture capital, I had a bit of thinking around the kind of, investor I wanted to be, and did a pretty, I guess, analytical thing, which is talk to a bunch of veteran investors that have been doing this for 10, 20 years, and talk about their relationships with their portfolio companies and kind of how they would sort of describe themselves as sort of the personal part of that value add equation. And I came down to a pretty kind of sort of joking sort of 10 archetypes around VCs that that can be added to your board, from kind of the veteran that's seen everything from the beginning of tech until now, but has perhaps 30 portfolio companies, to kind of the operator that started a company on their own in the past, but can provide sort of empathy and specific kind of advice on certain parts of the company building experience, to the therapist, which is someone that is more there to kind of reflect back at you things that they've heard you say in kind of your conversations together, and help you think through it using your own words and using kind of your own frameworks. And I think those are 3 examples. There's also kind of more funny ones, like the ghost, someone who puts money in the cap table and just kind of disappears. And I don't think that's a good example of value add per se. But it's, these things I think are hyperboles, but there's a bit of truth to kind of how personally, because VCs are people, right? How personally they can differentiate kind of on their value add side.
I love that. I have so many follow-ups, and I'll come back to you, so hold on to that thought. Joanna, because you've seen so much over, you're both the veteran, but you're also sort of leading this new age model of the venture studio. What are table stakes these days? What should founders look for, or what questions should they ask when they're about to sign with a VC, if they are in that privileged position of choosing?
I think that's first of all, it's a great question. And I don't think founders, depending on their first-time founders, we'll say in general, need to actually ask to talk to some of their other portfolio companies, CEOs. I mean, just as much as a venture investor is going to reference a founder should reference the venture investor and make sure, like, is this really the good fit for me? How do they operate? What level of engagement? How much trust do they have? How frequently do they dialogue? Do they feel like they have a partner, or is it someone who's really just kind of an overseer, or someone who's, kind of, you almost feel like you have to manage up to, which is probably not the relationship somebody would want with one of their investors. So I would say, just do your homework. I can tell you, the feedback I always got from our limited partners, and when they would do reference checking on me, was that founders always said I was their first call. And to me, that was super important. That meant that I was accessible, that I listened, and they felt like they could come to me with, as a safe place to tell me whatever was going on. And often I knew about things that weren't going right before the rest of the board. And that to me was really important. I hate surprises, and I'd rather have a founder be really open about what challenges they were facing. And it was important to me to provide that safe space for them.
I love that. So Wendy, on that note, and both from this, what you said now and our previous sort of interactions, I know you think through a lot about support and value add. Again, you have this advantage of having been a founder. What I like asking, how should a venture fund support a founder? But I'm just going to make this a little spicy and ask you what are ways that you think, what are things that a fund shouldn't do or an investor shouldn't be doing? Or what are some illustrations that didn't go the right way of support?
Yeah, I think, it's a super valid question to ask because it's perhaps more important than the shoulds, because I think sometimes the shoulds can be, easier to talk about. I think one lesson that I've learned throughout kind of my time observing different board members, certainly kind of thinking like an operator at times, and also by observing myself, and also from kind of the mentors at Northzone, where I learned, how to serve on a board from. I think people don't often realize how selfless this role has to be in order for you to do a good job. It's truly, not about you, and you really need to take the ego completely out of it. So it's more about how to frame questions, ask things in certain ways to get, the founders themselves, which are very kind of headstrong people generally, to think in a direction that you think would be helpful for them. I think, too often we come into it thinking, oh, I saw this really great thing in the market that that reminded me of you, and you should look into this. And if it's something that's relevant to their industry, chances are they've probably seen it 99 times, and their investors maybe already all sent it to them. And if it's something that's totally off the cuff, it could spur some ideas, but I think, a founder that has probably 10-ish investors on their cap table to deal with, and maybe even more, they probably get a lot of inbound requests like that. And so I try, at least personally, to distill kind of this thinking into more kind of pointed contacts with the founders that I work with. Unless they're coming to me on something specific, I always kind of provide, a support. But I do think that the board role has to be a truly selfless one, and encourage kind of openness and discussion, rather than foster kind of an agenda that you have sort of in the back of your mind.
Joanna, do you want to add to that?
Yeah, I think Wendy's spot on that it does have to be selfless. And it really, she said, it's about asking really good questions, not questions, when there's people who are asking a question and they already have the answer already in their head. And there's a little bit of, kind of not niceness in it, but it's about really trying to broaden the founder's perspective in terms of how they approach different things and came to different decisions, and asking questions on that to make sure that, there's no blind spots, that they've thought of things that your experience can add value to. And I think, the most challenging part I've seen is people who have come from operating backgrounds to remember they're not the operator. This is not their business. They can bring their operating expertise, to the board table, to the boardroom, to the discussion, but their job is not to help run the company. It's to really inspire great leadership in their founders.
I have a mentor who will remain unnamed, who told me once to get out of the board before it gets really large, because at that point people just want to hear their own voices. And that sounds awful to me, although that's not really been my experience. But
I can tell you that I actually was on a board where literally when someone spoke, the same man, I would get up and use the restroom because I couldn't listen to him anymore. And the founder called me and he said, I'm really having a challenge with him. And I said, you know that I get up and leave every time he speaks. And it was the only time it's happened. We went back to the firm that funded, that had, got the seat through their round, and asked for them to switch board members.
I love that. It's so interesting how what happens behind the scenes, right? And this is what I think we wouldn't talk about in a more general sense. So sometimes when I talk to our founders of very early stage, you have to educate them because a lot of them have been running their first companies. This is the first set of board meetings they're running. So you sometimes I feel like we have to educate them and say, you have some power here. You can, I read somewhere, someone offered advice to their founders and said, make your board work for you, which a lot of founders don't even think through, right? But a lot of really great segues here. One of my questions then about to you, Joanna, is to your point about investors remembering that you're not the operator here. Someone else is the CEO. They're running the company. That said, a lot of firms, some of the ones you've named, have giant platforms teams now. Do you think that approach really works, or is it a little bit paternalistic? Because company building should be the CEO's job, not necessarily the investors. Do you think it always works, or is this the wrong approach?
You mean the approach like in Andreessen with a large, is that what you're referring to?
No, I mean Andreessen, but also every firm now has a platform team that is pretty massive, and that's become a part of the pitch to founders and saying, hey, we can help you build this company.
Yeah, I mean, it's hard to see if it works because the only way you see if it works is over the long term in the results. I would hope that firms that are building that are also out and testing their position in the market and finding, am I on the short list of the top entrepreneurs? That's the goal of any great venture firm is to be the desired investment partner. In the firms where, bringing that expertise and having those platform teams and others is working, that should show up in the value that is, provided to the entrepreneurs, and the entrepreneurs seeking out capital from that firm. I saw a pitch the other day from NFX, and I'm just super impressed with so much of what they're doing out in the broader venture ecosystem in terms of sharing their thought leadership and points of view on things. And they actually go out and query founders, and they do outside research to see, are we on the short list of some of the best founders in Silicon Valley? And when I say Silicon Valley, I mean it globally. And I think that's really valuable because they want to make sure that what they're doing really matters. And I don't know if enough firms do that.
That's very fair. And Wendy, again, I feel like, I'm so excited to talk to you because you think so much about boards. With respect to your own experience and your work, how much work happens as part of the board meeting and how much happens off of it?
Yeah, I think that's a pretty easy one for me to answer. And I wonder if most investors share the same experience, but I would say 90% of the work happens outside of the boardroom. Especially in kind of the earlier days of companies. Some of my portfolio companies are still, fairly young. Some of them don't even have boards yet. And helping them set that up and having these types of conversations that we're having now is a part of, I guess, the value add. But in general, I think, the cadence of sort of having an ongoing dialogue, whether it's through text or, email or Zooms or whatever mode basically fits with the founder's kind of way of receiving information and in their schedule. That's sort of where a lot of the work is done. And then the follow-ups, I think, I think of the platform team actually to your earlier question is sort of a way to give leverage that are sort of specifically tied to the follow-ups of these conversations. For example, if a company needs to hire a head of people and they need to think about the different archetypes of heads of people, and this is the first time founder, and when to hire for this role, how, kind of these types of conversations, we first have them as an investor sort of advisor, but then we point them to people that have hired heads of people across different types of startups in the past, and then they could give more specific kind of operational experience, or if someone is evaluating corp dev targets and starting to build out kind of a corp dev strategy and a corp dev team, which I actually think is going to be pretty interesting for venture capital to be kind of a point of value add in the next few years, because we're seeing such great kind of acquisitions at earlier stages at good multiples rather than just acqui-hires, because there's so much capital out there. And so we can point them in the direction of an excellent kind of corp dev advisor that has negotiated and kind of helped companies do a bunch of deals that are in similar sort of in size and structure. But unearthing kind of these types of insights and kind of helping the founder reflect on sort of when to start to pull these triggers and when to sit and think about them a little bit more, when to do more exploratory conversations. That's sort of the part that we're doing sort of one-on-one. And then I would say the board meeting, I think, is a great way to, I've heard founders say, a great way to sort of synthesize all of the inputs they're getting from different directions of the business and different investors and also members of their team. And preparing for the board was actually the more useful exercise than the actual board meeting in itself.
Yeah, I was, Siri, is okay if I comment? Because Siri, I'm thinking about your comment about getting off a board when it gets too big. And then Wendy's comment of so many of these companies, if they're early stage, don't even have boards yet. So that, hands-on, that more, kind of in real-time expertise and support that Wendy's providing is so valuable because you don't have that more formal structure. I just wanted to mention I'm on the board of a nonprofit called Him for Her. And our goal is to get a woman on the board of every private company by 2025, because we believe a woman should be in every important room in the world, and the boardroom is the most important room in business. And we need more diverse thinking and perspectives there. But one of the issues, and we're actually creating a public benefit corp to address this, is it's one thing to put someone on a board. It's number two, how do you make boards really effective? And if you look at so much of the support for that out in the world is much more around the IQ of the board. There's programs at Harvard and Stanford and other other educational institutions run about being on a comp committee or audit. But there's so much of the EQ in a boardroom that is so important, and no one's teaching it. The way you get taught it is by being on lots of boards over time and observing it and learning. So this is something that we're just about to launch, but it's absolutely critical because as boards get bigger and you have so many diverse voices, it doesn't mean that it's going to operate effectively. And especially when you have first-time founders who have never managed a board before. And the board hires and fires the CEO. Everyone forgets that.
That leads into so many of my questions. I'll pick one. To your point about a functional board dynamic, right? So I feel like in my very short experience over the last 5 years, I've seen boards that are extremely functional and collegial and very just very productive. Then there are the middle ground ones, which I find a little performative and theatrical. I feel like it's very clear that a lot of the work is done outside the board. And then there are the ones that are frankly just dysfunctional, right? And there's tension, or there's those characters that don't quite work. All of us know, for anyone listening, and I hope it's okay to bring this up, but there was this great memo written by the founder, Ryan Kalbeck, about a board member who remains anonymous that didn't work out. And that was actually really not productive for the firm. So, and that was kind of shocking. How, and this is for both of you, so feel free to jump in. How do you approach it when you are especially helping create the board and then, are the board member with the most tenure? How do you, and also from the perspective of a founder, how do you build and maintain a functional dynamic? And how do you also sometimes just have the moral sort of courage to say, hey, this is not working?
Wendy, you want to go first? Go ahead.
I've not obviously had as much experience, but on kind of the navigations, I think it's important to sort of lead by example in some settings. I've heard, I've read that same memo, and personally, I took it upon myself to study it deeply and make sure I never do any of these things. But I think it's, sometimes, there's extreme cases like that. And I think most of the time it has to do with like a chip on the shoulder with the person and their ego. I'm not sure kind of specifically what happened then, but, usually those things should be resolved, I think, with the person. And I think founders are so well positioned to do this now, given kind of the increase in amount of capital flooding into early stage venture and still kind of the same level of talent, right? I think there's a lot more leverage that founders can have in these conversations, just to be honest and say, this, hopefully you've done your diligence kind of before you signed up that investor as well. So kind of what you're getting into, but once you do, like what's to have the conversation around, hey, what has changed? And what isn't working for you? And I noticed these things. And I think, our job is to help kind of coach the founders to resolve these conflicts, because they're the ones in the driver's seat. And it's never, again, we would be airing the same error if we took it in our hands to kind of resolve that conflict at the board level. But I think there's certain things you can do to navigate and steer the conversation in different ways, or just leave the room like you and Joanna do when someone is just speaking kind of in a way that's not tolerable, and hopefully they pick up on the cue. But chances are, if they're the one making those errors, they probably aren't sort of able to pick it up on the EQ side. But yeah, it's definitely hard to navigate. I'm not yet, I've not been in a situation where we've had to restructure the board in this way, so I can't comment.
Just to add to that a little bit, I think if it's scary for a founder to have that conversation with a board member who's being really challenging. It really is, because again, it's, one bad apple spoils the bunch. And when you have someone who's not great on a board, it really, there's board meetings, I'm sure we've all had, where you're super excited to go. You love the team, you love the company, you love what they're doing, and you love the diverse perspectives around the table. And there's great respect. And there's ones that are just like, you just dread, because there's just some strange dynamics. So I just think the best thing to do in those cases is not leave the founder alone to go have that challenging conversation, but a board member and the founder together should have the conversation with someone who might be challenging on the board. So they recognize that this isn't, someone's got the founder's back, that other board member. It's like any even challenging HR conversation. You always have two people. So that would be the suggestion that I would have, is to try to have the conversation to see if you can change, the dynamic and make someone aware. I had a situation with a board member who he would agree in the room. So we'd be discussing a topic and we'd come to some agreement. And then he would call the founder after the board meeting and share a different opinion. And so I asked to meet with him before the next board meeting. And I said, why are you doing that? That's just, we're coming, if you have an opinion in the board meeting, you need to share it so we can discuss it, debate it, and come to some kind of mutual agreement. And he said, I'm not comfortable saying something controversial in a room with others. And I'm like, you are in the wrong business. Because it was really, think about that founder. He thinks that he has a board that came into agreement, and in this case, the person was the largest funder. And then they would call him later with a completely different idea. I feel sorry for those founders.
I want to tie this, Joanna, to something you said earlier as well, right? So much of this job is just saying uncomfortable truths to people who may not really agree. So I always struggle with this question, but we are three women. We've all probably been the only women in several rooms, and some of us are taking these board positions which are overwhelmingly male and have been that way. Plus, a lot of us, go on to our first board meetings as sort of the younger members of the board as well. So to that, and I'd like for Wendy to address this also, because I know she has an interest in this. How do you approach being the youngest and often the only female voice in the room? And how do you grow influence as a board member?
I'll share my experience on it, and then I can't wait to hear Wendy's. So first of all, I used to have to tell myself, I'm here for a reason. I have a purpose and I provide a perspective, and to feel confident in that. What are the things that I know really well that I think, I can add value? I'm not just speaking for the sake of speaking or saying yes to something that someone already said. So it was almost a self-reflection exercise to say, what are the things that I really bring to the table? And there were plenty of times where people would talk over me, or I was always the only woman, it seemed, the only woman in the room. But again, I would make sure that I contributed. I didn't allow myself to get intimidated by almost the collective voice and a bit of, sometimes the testosterone in the room. I think this has been an interesting aspect of virtual board meetings, because what I have found, and we found this at Him for Her too, that in a lot of the discussions we've been having with board members is that women feel like now they can get more equal airtime in a virtual format. It's just, there's something, it's just more obvious that each person is speaking in the virtual way, where it's in the room, one or two people can take over the dynamic. So I encourage younger and diverse, if you're the other in the boardroom, is to really, you have to work hard. Sometimes I go into the restroom and, tell myself I deserve to be here and walk back in. But I think you have to really make sure that you continue to contribute, and the contribution will have an impact over time. And if you're not feeling like you're being heard, that's when I would actually bring it up in the board. I would talk to each board member one-on-one, and also have a conversation with the CEO.
So I think, a couple of ways, two things. One is, I think a lot of the influence, or kind of the relationship you have with the company, is built with the founder outside of the boardroom anyways. But within the boardroom, I guess this is also a bit of psychology, self-psychology on my part. I tend to focus on the exact narrative and the discussion and the idea that we're all kind of trying to build on together. And I think that's objective. And if you can make it about, that idea or those ideas, then you kind of take yourself out of the headspace of did I speak loud enough, or did these people hear me, or did they do that? I think over time, if you continue to do that, people do hear you, and you back founders that do care about that versus who speaks louder, or else they probably wouldn't have picked me personally to be in their board anyways. And I think, and the other aspect, I think two tactical tips that helped me kind of early on in my career was, I think women tend to be overthinkers anyways, and like much more critical of the things that they're about to say in a crowd or a group context. And so since you have that kind of self-critical filter, the things that you are probably about to say are going to be higher value add than the average person that doesn't have that filter. And so feel confident to just like go for it whenever you do feel the need to do that. But overall, I think, taking the emphasis, and perhaps naively so, off of some of these like power dynamics around who speaks first and how loud they say it, and if they repeat after you the same thing that you just said, just let it be and focus on the idea. And I think enough people who care about that, who are the people that you want to hear you anyways, will realize kind of the contribution that you're making.
That's such a great point. I wanted to tweet that out. Okay, so we have only a few minutes left. So if you're listening or watching, if you have questions, please send them to us. I'd be more than happy to pose them. I guess one of my last questions, and one I think about a lot, is I think we are overwhelmingly in a founders market. So I think there's a lot of capital chasing by a few founders. That said, I always think about the term value add, and I do think there can be a lot of value in bad news, or some feedback that nobody wants to hear, or saying something, sort of the emperor saying the emperor has no clothes is really valuable when you're running a company that has a lot of value and a lot of stakeholders. So in this environment where being founder friendly seems to be just agreeing with founders, how do you deliver valuable bad news? How have you approached it? Two questions: how have you approached it, and what are some maybe illustrations of founders who've accepted that, even if it's been a really bitter pill to swallow?
Yeah, I think it goes back to what we talked about at the beginning. Wendy touched on this, and it's about that relationship that you build with the founder, and therefore the trust to be able to have just a really direct, open conversation. There's always ways to frame those conversations to say, look, I may disagree with where you're going, or I disagree with, other members of the board around whatever topic or issue it may be. And just find a way to have that safe conversation, to say, set up separate time, and I'd love to talk to you about whatever the topic area is. Let them know in advance, and really just try to have an open conversation. And if you feel like you can't have that, that's probably a sign of lots of bigger issues related to even the founders. Wendy said this, like, founders are really strong-minded, but they also have to be open to outside input and contribution. The minute you take a check from someone, you're signing up for that. And it's really trying to find that right balance. But if the dialogue is good, those conversations, as challenging as they are, can happen. And if the dialogue isn't good, then you got to figure out how to either make it good or make some other change.
Yeah, I think, ways I've seen it done really well with sort of veteran venture capitalists, and something I'm trying to emulate as well, is like they ask a lot of questions to kind of get the founder to reflect and then start thinking kind of in ways that, I don't want to say steers, but, helps them kind of realize, for example, they've, accelerated burn prior to product market fit, and perhaps to a degree that it is too aggressive for the board. You can start asking them questions around kind of the details of why they've done that. And usually founders are aware enough and self-aware enough to start to kind of answer their own questions. But that doesn't always work, right? If it's something that you just hard disagree on, I agree with Joanna. It's better to have an open conversation where you can talk about the facts, and talk about the idea and the disagreement and exactly why, and here sort of at least come up with a couple of vectors that you just hard disagree on, that can be supported by data on both sides. And then as long as it comes from a place of deep compassion, I think, that's a good starting point.
Yeah. And Wendy, I'm sure you find this too, but you have to also just decide, I'm going to disagree and commit.
Yeah.
And boards do that all the time. Not everyone always has to agree. In fact, if everyone is always agreeing and thinking the same way, then that's probably not the best board. But there are times where I'm on a public company board where the CEO and I'm just like persistent. I keep pushing on a topic, but we disagree and I recommit. And I feel like at some point we're going to get there, but I feel like I'm edging my way there.
Yeah.
I love that. And I feel like there's so much we've talked about, but there's so much we haven't talked about. For instance, public company boards, I'm guessing, are very different from private company boards. That said, okay, final question for both of you. What is one piece of advice you'd give founders as they navigate their relationships with investors, both in terms of asking for what they need and also being open about what helps and what doesn't? I know we've talked a lot about boards, but for a majority of the founders, the board meeting, and the board composition, board dynamic is just one aspect of their relationship with investors. So, Joanna, do you want to take that?
Sure. I am. So it's very interesting, and I don't call venture capital financings deals, because deal to me is a transaction. When you take money, it's the beginning of the relationship. It's like, when you're in the fundraising stage, that's like the courting. And once you take that money, now we're committed. Now we're together for depending on the trajectory of the company, it could be a decade or more. And put the same kind of care that you would into any relationship. And ask as a founder yourself the question, is this a person? Is this a fund? The ethos of that fund that I really am excited about having be a part of my company, an extension of my team that I can go through, 10 years with. I actually, a great mentor and advisor of mine used to say, another way to think about it is, if you got stuck in an airplane, a 10-hour flight next to that person, would that be a disaster? Or would that be something that you'd really look forward to? And that might be just a simple way to think about it.
Just quickly, yeah, because I think we're getting to the end of our time here, but to Joanna's point, I approach it like, most long-term relationships. And I think that usually starts with a bit of self-reflection in terms of, what am I capable of? What do I have in the executive team around me, and what kind of a person I think could kind of speak to me in a way that I could take their feedback and their advice in a productive way, rather than, maybe have kind of an ego battle over, or maybe I need someone that gives me a bit of confidence on kind of the branding side to help me recruit. Or maybe I need someone that's similar in age to me, or I need someone that's a little bit more experienced, so they've seen more and done more. And I think when you kind of start with these types of realizations, the relationship kind of starts off on a more even footing. I've had once a founder say, I'm looking for an investor that is, maybe this is a sign of the times, that's docile and a good companion. And hey, like that's something that they reflected on, that they wanted after having, experience with a bunch of different investors. And then I've also had other ones say, I need ones with operational experience, or I need ones with international experience. And so sometimes that's a pitch, but I think, if it comes from like a true sort of genuine self-reflection, it's a basis for a better relationship.
This has just been so wonderful. Thank you, Joanna and Wendy. Last question, really, if founders or other technologists want to reach you, what are the best avenues for both of you?
They can email me directly at Joanna@West, WEST.ventures, VENTURES, not .com, just West.ventures.
I'm much more responsive on Twitter DM. My inbox right now is abysmal. It's WEN_XS.
On Twitter?
On Twitter.
Lovely. I get that. I feel like I'm so much faster on Twitter DMs as well.
I'd show my age. I'm not. Even though we did branding and marketing for Twitter and redid the Twitter bird to make it more beautiful.
It has nothing to do with age. It's just that I spend so much more time on Twitter, I feel like, these days, than my email inbox. Not a good advertisement. But this has been wonderful. Thank you both so much for your time, for your wisdom. I really appreciate it. I'm going to wrap this up. If anyone wants to reach me, also find me on Twitter, but email works as well. I'm Siri, SIRI@draper.vc. Again, thank you so much, both of you. It was lovely to have this conversation, and I hope that we can continue it offline. All right, I'm going to throw this over to Ahmad, who will introduce the next session.